Welcome to Markets Now. I'm Michelle Rook along with Don Rose, U.S. Commodities, and we did have a mixed to lower day in the livestock futures, mostly lower in the grains as well. And Don, let's talk about some of the pressure in the grain market. Sharply higher dollar and weekly exports were kind of disappointing, weren't they?
You know, again, it's the exports that continue to anchor this market. We can't hold rallies because the demand just is poor from an export standpoint. Dollar's too strong. We're not competitive in the world market on corn or wheat. Soybeans were competitive just because basically South America is pretty much sold out. Their crop doesn't come to the market until starting in January. So we have a little void here where we are the best of the worst in town.
Well, and speaking of exports, of course, it was on again, off again here with the export deal in the Black Sea this week. And now we've taken more of that war premium back out again, haven't we?
Yeah, you know, Michelle, the Putin rallies, as we call it, just continue to fail. You know, failed up around the $12.5, $13 mark, failed at this $9.50 rally just recently. Again, $9 again on D-Sweet. And we continue to sink down into the support zone around this 820, 830 on December wheat. But, you know, it's more about Putin. It seems like he doesn't follow through with these big threats. And then consequently, the market takes out that premium again, the war premium, if you will. We'll see November 18th. The corridor is supposed to, that deal ends. We'll see if we get a new one renewed again. That's going to be the question mark.
Yeah, what do you think is going to happen there, Don?
Well, you know, I think if you look at it from a Putin standpoint, he's got a lot of wheat to sell, a lot of wheat to clear at some very cheap prices. Our best guess is that he's going to let the corridor stay open, but really try to throttle it back just to very impoverished nations. And Turkey watches the exports very close.
So did you also feel like the markets had a little bit of a technical failure this week as well after we had the news on Sunday night that we were going to have, you know, the export corridor shut and we couldn't get above some key resistance areas on corn, wheat, or beans?
Yeah, exactly, Michelle. I think that is really the big story. Soybeans fared the best because they're not tied to the corridor really, but D's corn again couldn't get over $7. That's been a repeated thing for about 2 months. The wheat market now can't even get over $9, so that's an issue, and it's really just basically technicals. I think what it really says is that we're kind of at a fair market value. It's kind of this transition between North America issues with the Ukraine shipping, with South America uncertain here what's going to happen going forward. And it's just too early to say with the weather in a La Nina still continuing, but it's reached an equilibrium for right now. We'll see what the November report says.
Yeah, and let's talk about that because, like you said, we're trading sideways. Is there anything in the WASDE on next Wednesday's report that you think could break us out of these ranges?
Well, I think one of the fears that you have to have is going to be both the supply and the demand side. And I think there's some real risks that the yield could go up on corn and soybeans. I think there's a real risk that the exports on corn could be slashed 100 million on this report. On wheat, maybe some. Soybeans, probably not yet, premature. But, you know, I think it's one that you have to be careful. Typically, small crops get smaller. Could this be the one that turns us the other way? And then we right back to the weather right away. I think after this report, no report from the supply-demand balance table in December. So this is it for the rest of the year.
Yeah. On the supply side, we have seen a few private estimates here that have at least raised corn yields, right?
Yeah, not only raised corn yields, but also raised soybean yields. And I think when you look at the government yield, 49.8 compared to last year, remember when they raised it again on the September stocks report, up to 51.7. Yields look a little bit low. We had some late rains. I know we had some frost concerns also, but it's going to be, it'll put probably after the November report, Michelle, it's not going to change a lot from there from the yield and production standpoint.
So let's talk about the cattle market. Some steady to better cash trade here this week, yet that market has continued to kind of look tired, hasn't it?
Well, you know, it's that cyclical bull market. And I tell you, just the cattle industry is bullish. And of course, we know that. We understand it's a cyclical bull market for the next 3-4 years. That's just how it works. But we've been pretty excited on dialing in all that bull news. And I think now we have to, reality hits. And we always say eventually it's the demand. You either sell it or smell it. And I think that's the thing. Can you move the beef? Pork's starting to move pretty decent, and some competition ahead. But it's not the supply side, it's the demand side, Michelle.
Yeah. So do you think on the hogs, you mentioned demand, we had good exports this morning, over 40,000 metric tons. Was that what popped the hog market initially, or at least firmed us up, or was it the fact that we have this big discount with the futures to where the index is?
Yeah, I think that's it. That's the trade is just the opposite on the hogs versus the cattle. The trade wants to be bearish on the hogs, at least for the fourth quarter. We get excited, press those discounts just too much. Then the cash doesn't drop like you think. Then the demand starts to pick up a little bit better. So to answer your question squarely, I think what we're really saying is the discount's just too big. The technicals are weak. Remember, on February hogs, there's a gap all the way down to just above 79. So, there's some air to the downside if this thing doesn't perform. But supply should pick up the next 3 to 4 weeks, and that's an anchor on the market.
Okay, appreciate your analysis and your time as always. Don Rose with U.S. Commodities with Markets Now.